This investment Guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said! Well said! Well said!
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Presented by National Stock Exchange.
Markets already seeing a 1,000-point gap up in pre-open. Lots of action expected today. Let's take you through the headlines. The announcement of the India-US trade deal could be the trigger the stock market has been waiting for. Dalal Street set for a gap-up opening with fading trade tensions likely to bring back foreign investors. Fund managers see the deal as a catalyst for global investors to return to India after the worst January in 10 years. Rupee set for a big rebound. Days ago, it was flirting with the record low of 92 a dollar. Analysts see it recovering to 90 because of an expected increase in FII flows and export remittances. The US trade deal brings tariffs on Indian products to 18%, the lowest among its top ASEAN export competition, lower than the textile hubs of Bangladesh and Pakistan, and much lower than 34% imposed on China. It's a boon for Indian exporters who have been in limbo for over a year, takes the fiscal pressure off the government as well. Analysts warn a lot remains unexplained so far in the US-India trade deal. Will India completely halt Russian oil imports? When and how will the tariffs be reduced? Government is likely to talk about the fine print in Parliament very soon. And Boeing 787 Dreamliner faces what happened to the AI 171 flight on takeoff 6 months ago. As well, we'll tell you more about that on the show. Well, the moment the markets have been waiting for, and the trade deal finally reaching conclusion, done and dusted. Dalal Street is on fire. History has been made overnight as India and the US seal a landmark trade agreement, sending a powerful signal to global markets. The 50% reciprocal tariff on Indian exports has now been slashed to 18%. That's the lowest among major export competitors, lower than Bangladesh, Pakistan, and far below China's steep 34%. Now, this is not just diplomacy, it's game-changing. It's going to see an economic breakthrough. And for more on this, we're joined by Karishma Sudani. Let's get into the nitty-gritties of the deal. The gift Nifty is flashing a massive signal. Huge gap up on the Nifty at this point of time. The Josh is sky high. Karishma, good morning. Okay, we'll go back to Karishma in just a moment. But sentiment is euphoric right now. Confidence flooding back. Shell, good morning to you as well, and let's take a look at the markets and the kind of gap up we're seeing. Remember, today is also expiry. Will the market manage to maintain this gap? How is it looking?
Good morning to you, Aabha, and all is forgotten and all is forgiven. This gap up should be a trend day. Remember, today it's the weekly expiry of the Nifty. Lots of people are short in the market. They will cover after the gap up, and then you will see a trend day. The index most likely to end at its day's high at 3:30 p.m. Keep an eye out on textile stocks. Yeah. Keep an eye out on auto defense plays like Bharat Forge. Remember, they sell a lot of parts to the US market. Keep an eye out on the entire IT pack. We also need a clarification on H-1B visas, which should be coming a little shortly. And this is what we've been waiting for the last 18 months or so. Let's hope the rupee also gives us strength. And that's the point when FIs probably will pause in their selling mode. So this is a very, very strong momentum that we are looking at right at the beginning. A gap up, death to bears, and then moving on the way up.
Okay, we're going to go to Dr. Ajay Sahai in just a moment, but let me first bring in Karishma just to give us the major details of the trade deal, the contours, what's been announced, coming in late last night. Karishma, very exciting for the markets, immediate reaction. We're just counting down to open now. But tell us really what this means. We're, of course, anticipating fund flows back into India as well. Huge confidence returning. What are the key contours of the deal?
Last night, Aabha, I was sharing it with our other colleagues that it's too early to celebrate. But when Ambassador to India, Mr. Gore, had on India today, in fact, mentioned that the total tariff now comes down to 18%, irrespective of reciprocal or punitive, definitely makes for a great deal and sets the fundamentals and path for what's about to come between United States of America and India. We really need to watch out for how markets react after the mini slump that they've had because of the budget announcement. I think this definitely comes as a ray of hope, but what we need to understand is the fine print, because the fine print needs to clarify on the exceptions that were a part of this tariff with pharmaceuticals and other such auto components as a part of the sensitive sectors. So we need to check what is the fine print about and how will India analyze it. Sources have told us that Commerce Ministry has started to already work on details, but we're yet awaiting an official document based on the tweet and the communication that has come in from even Prime Minister Modi's office. They're trying to understand what works in our favor and what does not. But clearly, definitely is a good signal towards a trade deal and coming at a time where the exporters have been taking the blow.
All right, Karishma, thanks so much for joining us with that, and we'll keep coming back to you for more on this. I've also got Dr. Ajay Sahai with us, DG and CEO FIEO, on this historic deal. Ajay, good morning. Let me get your perspective. Markets are, of course, euphoric, and I think the key line to take away also is clarity. We've been waiting for this deal since towards the end of late last year. It was expected to come, and I think almost the markets had given up hope of seeing any kind of resolution on this front, and a lot has been hanging in the balance, especially for exporters. What's your reaction to the deal this morning?
In fact, it's an extremely positive development. We were waiting for this deal to happen. We were so far yet so near and so far also, but finally it has happened. It's a very good development. I'm pretty sure that our exporters will be much pleased now. They have the deal with the EU, they have the deal with US, and probably we are now entering a problem of plenty. Very good sign for the export sector. And in the traditional sectors of exports where we were hit because we were having a high tariff of 50%, our competitors were having a tariff of 18 to 20%. Now we will be competing with them. And in fact, if you look into the countries, except with UK, EU, Japan, and South Korea, we are best placed in terms of the tariff. So probably we are looking to push our exports into the US market. The good thing is that for some of the sector, particularly in apparel and footwear, the order for the next seasons have been deferred by the foreign buyers. They were waiting for deal to happen, and those orders will also flow to India. So we are looking into huge jump in India's exports, and at the same time, we are also looking into importing more from the US. We are already importing a lot of energy products and probably defense, aviation. Other sectors will be added to that. We are looking into balancing of the trade also with the US. And I would like to thank the two top leadership and our Commerce and Industry Minister for working out this deal. And this will pave the way for cementing India's relationship with the US also.
So as you said, Ajay, right now, you're spoiled for choice between all the mega trade deals that have been signed. And I think in terms of a fillip for exporters, the government couldn't have done anything else, in the sense that this is really now all systems go in terms of the various options and the kind of orders you can look at. You said that a lot of orders had been deferred. Give us a sense of the kind of traction you anticipate now to kick in, and how much more of a fillip given the kind of slash on those tariffs that we've seen. What's the kind of reaction or the manifold impact that we could see in terms of growth, numbers, orders going forward?
In fact, in sectors, as I told you, in apparel and footwear sectors, the order for the summer seasons were put on hold. Those orders will flow to India. That is on one part of that. Secondly, since our tariffs are very, very competitive now, we will look into pushing more exports to the US. Despite this high tariff, India's export to the US between April to November was up by around 11.4%. So probably we need to build on the momentum now. We will have the option of diversifying, de-risking our exports also. And I think probably the time has come where the industry needs to invest more in the business for expanding the business, because you have markets opening up and probably you need to augment your protection to take care of those markets.
Sure. Dr. Raju, when does the 18% cut come into effect by? Would you have any knowledge on that?
We expect it to happen very soon. Probably we are waiting for the executive order to come. And once the executive order comes, the final nitty-gritty will be known to us. But the sheer fact that tariff has come down so drastically is giving a lot of optimism to the Indian export sector.
Okay, do stay with us, Karishma. Let me bring you back in here as well, and I'll of course also bring in Shell as we count down to opening. But Karishma, in terms of what you're hearing as well from your sources, from the various exporters and industry associations that you're speaking to, what's the overarching sentiment? I know that you were saying it's too soon to celebrate on the until we have the fine print, but the general consensus from what we can see and the way markets are ready to respond to this does seem to be overwhelmingly positive.
For a lot of exporters, and coming at a time where the trade numbers have also taken a slight hit. If we talk about the month of December, as per India's Commerce Ministry data, we had a close to $6.65 billion trade with the US, but comparatively we were on an average of say $7 billion at least in 2024. So this minor downfall was because of the sentiment in terms of the 50% tariff, and this is also one of the reasons why Indian budget just 2 days ago rolled out important key relief measures for its labor-intensive sectors. While Finance Minister Nirmala Sitharaman has said that they're nothing to do with the tariffs, but directly or indirectly, they do have an impact to cushion the economy in a way that the exporters are not hit. On ground, currently optimistic, but I'd reiterate what you said and what I've been saying, that maybe too early to celebrate. Let's wait for the fine print and let's understand the nitties and gritties of it.
I think Karishma, markets just need a reason to celebrate. So, but let me just bring you the Prime Minister's commentary as well. And remember, in February last year, he'd said the US and India had set a target of doubling their bilateral trade to $500 billion by 2030. The two nations had also said that they would work together on artificial intelligence, semiconductors, and focus on establishing strong supply chains for strategic minerals. Listen into this.
आज हमने द्विपक्षीय व्यापार को 2030 तक 2 गुना से भी अधिक बढ़ाकर $500 बिलियन तक पहुंचाने का लक्ष्य निर्धारित किया है। हमारी टीमें एक पारस्परिक लाभकारी ट्रेड एग्रीमेंट को शीघ्र संपन्न करने पर काम करेगी। भारत की ऊर्जा सुरक्षा सुनिश्चित करने में हम ऑयल तथा गैस ट्रेड को बल देंगे। ऊर्जा इंफ्रास्ट्रक्चर में निवेश भी बढ़ेगा। न्यूक्लियर एनर्जी क्षेत्र में हमने
All right, we have both Shell as well as Dharmesh Kant with us to track the market opening. And Shell, just coming to you first, because we're just counting down to opening bell. It's looking incredibly good today. And as you said, we're already hitting all-time highs just in the pre-open, likely to end at those levels at 3:30 as well. Just take us through what we can anticipate counting down to opening bell.
So, auto stocks such as Sona Comstar and Bharat Forge, as also Balkrishna Industries, they get a lot of money coming in from the US. The entire IT pack, Aabha, the top gainer is the IT index. You will have a blowout on banks because exporters will be benefited because of this trade deal. Therefore, banks will have it a little easier. Chemical stocks all those who get their revenue from chemical from the US like Camlin Fine, Aarti, Glaxy, surfactants. I have a crisis of plenty in the morning. Bears are going to be taken to the cleaners.
It is so good to see this just a couple of days after the budget mayhem. And the Nifty 50, 4% higher. What a fantastic move we're seeing on opening. We haven't seen these kind of opening levels in a very long time. This is clearly historic. You're also seeing the rupee surging on the trade deal, and that's also incredibly important given the kind of pressure we were seeing on the currency till now in light of all this uncertainty. A clear move on the currency, jumping 1.11 versus the dollar, strengthening rupee this morning, and the Nifty up over 4%. So the rupee at 90.4 to the dollar versus Monday's close of 91.51. Clear, sharp up move on the currency today, breaking free of all that uncertainty, all that pressure on the back of waiting for this trade deal to come through, and the kind of uncertainty the entire export sector was seeing. Surge on the currency, surge on the index this morning. Let's take a look at the Nifty as well. 700 points up, 25,800. Clear recovery from the losses of 2 days ago, but also just a fantastic reaction to the trade deal coming through. This was the big fillip that markets were waiting for. We've been waiting for a clear trigger to come in for the markets, something to get momentum back, and this is it, with all that uncertainty being wiped off the charts. 25,785, almost 3% higher right now. 700 points. Remember, it is expiry. We do expect to see some of the shorts build up before the markets also continue to trend higher later in the day. Nifty opening up over 1,000 points. Biggest ever gap up open. We're watching history in the making this morning on the back of the US-India trade deal, and the way that India has gone about sealing this deal with the US also being applauded by global analysts, saying that this is very comprehensive, come about very calmly, and really we've come back with securing the best tariff cut amongst all the other regions and competitors right now. So you've had the EU-India trade deal, you've had now the US-India trade deal, and exporters are clearly thrilled with what they're seeing and the kind of options that are going to be opening up for them. As Dr. Ajay just said, this is likely to be in the flow or executed pretty much immediately. That's also, of course, lending to the euphoria. Ajay, I want to get your take on the currency as well, because it really seems to be all systems go now for exporters.
No, in fact, I think Indian currencies from here should strengthen, because we will slow much flow of dollar, and the mismatch between demand and supply to a large extent will be addressed. Exports will perform very well, and therefore the supply side of the dollar will be augmented. So I expect the rupee to strengthen. In fact, rupee has depreciated beyond a point, and in fact, if you look into the global currency, probably we have depreciated much, and therefore from here we should try to strengthen the currency.
Fantastic. I just want to mark gold and silver too, because remember, we're now entering a risk-off zone. So just given, of course, the kind of drubbing they've seen recently as well, maybe they knew before the markets did in terms of what was to come. We're definitely going to see an impact on gold and silver as well, and we'll just show that on the charts for you. But Dharmesh, good morning. Let me get your reaction to this historic deal, and more than that, to the kind of historic up move we're seeing on opening today.
Yeah, very good morning, Aabha. I mean, it's not a good morning, it's a very good morning for the market after a long while. So last 1.5 years had been quite painful for the markets. So this deal is coming. I mean, now everything gets settled. The European trade deal is done. US tariff deal is now getting settled, and settled in favor of India compared to our competitors or the neighboring countries. And this is coming on the background of a budget which, to my mind, was excellent budget. And we have actually yesterday morning openly or vocally advised all our clients to go long if there is some correction. Fortunately, the market obliged us. I think going forward, it will be again back to the valuation game, stock-specific plays, and earnings outside the Nifty 50 index has been quite robust. Around 320 companies aggregate has posted 16% YoY PAT growth. This is after taking into account the labor code related, provisions which has been made into the P&L. So I think overall, the sentiments needed a boost, which we have got through. Let's wait for the fine lines. I mean, how the deal goes through. Section 232 is critical here for the auto and auto component companies. And what is the final rates being laid out there has to be seen. But apart from that, gems, jewelry, textile, sculpture, art and architecture, all MSME plays are in for a good buying traction. It's a buying market and cherry picking market from here on.
Absolutely. Look at the auto index, 3% higher. Nifty Financial Services, 3% higher. It's gains all around. Look at the gains on your screen right now. Indocount, Kitex, Gokuldas. In fact, Indocount, all of these have about 70% exposure to the US. So fantastic reactions coming in this morning. Shail, as you were saying earlier as well, we're going to be spoiled for choice. And as Dharmesh is saying, it's a buyer's market out and out this morning.
Aabha, look at the 20% circuits and it's a very easy read. Textile, KPR Mills, up 20%, 1030. Look at Avalon Technologies, it's get 57% of its revenue from the US. A circuit up 20. Avanti Feeds, exports shrimps to the US, 20% up. Look at Camlin Fine, this is something that I'd marked. Look at Kitex, look at Yasho Industries, Wellspun Living, Apar Industries, all of them up between 17 to 20%. Himmat Singh Seede up 18%. So this is the kind of gains that we are seeing at opening quotes. Remember, now after this opening quote is through till tomorrow, because you have a circuit, you will see further buying. At the moment you have 25,800, which is with the bulls. This is up 700 points on the Nifty, 763. Small cap index is up 3.5%. So that's a very big plus. More importantly, you have a very strong move coming into Indian IT, which is going to be perhaps the biggest beneficiary, because corporate boardrooms will see some changes in the US, and the GCC trade a 21-year tax holiday in the budget. So keep an eye out on the Nifty IT index as well.
It's 3% higher right now. We're just seeing phenomenal gains across the board. Broader markets, mid-cap index as well, looking incredibly strong right now. We've got banks on fire, IT on fire. Dharmesh, it's just gains all around this morning. Where would you perhaps look to place your bets if you were looking to buy today?
Stock specific kind of an IT play, where it's more of engineering, research and development than pure software plays out there, because software is going through a big transition. So for me, it's more of a mid and small cap there. I think Tata Technologies, Orion Pro Solutions, Genser Technologies, all merits again there, where the numbers were good and the traction seems to be quite good going forward. At the same time, banks proxy to the economy, everything looks in favor of them. The only worry was that because of the extra debt borrowing in the budget, the yields will go up, and because of that, they would have an impact on the other income basket, the treasury side, which I think today gets also settled with the rupee, appreciation coming into play. So banks definitely merits again. Again, I would be going from here on the private sector banks, and there I think IndusInd Bank and Axis Bank merits a very good case out there. Apart from that, our structural defense and railway plays on, because see, if you look at the defense expenditure, it went up by 21%, and the execution itself from last year allocation to this year execution was up more than 14%. So there's a thematic structural play in the making. Any declines out there should be bought into, and the top two picks are there, HL and BL. So it's an outright buy market, and if you are sticking out the good companies, good sectors, I think there's nothing to lose out here. It's a market trading. I mean, tomorrow there may be some cool off, but again, that's a part of the market. If you're looking 3 months, 6 months down the line, all the macro tailwinds are now in favor of India.
Lots to choose from there. Ajay, I just want to ask you about the implementation again and the kind of cut that we've seen from 50 to 18 on tariffs, for the viewers that have just tuned in as well. Also the removal of the oil penalty, lots of key factors stacking up. When you see this being implemented, any details on how and the kind of time frame, like we were discussing earlier, in terms of when we start to see the impact on ground and on growth?
I'm expecting that to be announced very quickly. We may see the executive order to be out today, and if that happens, we have to see the effective date of implementation. But I'm pretty sure the kind of tweet which the US president has just released, probably this is giving an indication that it will put into operation as early as possible.
All right, fantastic, Ajay. Thanks for giving us your perspective, and just sharing the kind of euphoria that we're seeing from the industry as well this morning, Shell. I feel like it's a morning where everyone's going to be spoiled for choice, not just in terms of pockets to invest in, because everything is on fire today, but even gold and silver are continuing their up move. It looks like it's all systems go. We've got the budget behind us. The trade deal has also come in. Really good, not sure, we should have asked for something else, Shell, as well. So, just ticked off all of those points in the first and second week of Feb. Yes.
Yeah, that's true, Aabha. But the fact is, a great overhang, a Damocles sword has been taken off the neck. You have a deal with the US yesterday night, and one last week from EU. These are India's two largest trade partners. A lot of bilateral deals are happening. Remember the one with the UK as well. So, this sentiment that was there because of consistent FIIs selling, let's hope it eases a bit. Nobody's asking the FIIs to start buying tomorrow because there's no earnings growth, so to say. But let's see whether they pause the selling thing or not. 41,000 crores was withdrawn on a net basis on the monthly January sales figure by FIIs. Let us see what February holds. But for the moment, record highs on Shriram Finance, record highs on Axis Bank, on State Bank of India, City Union Bank, Karur Vyasa, ICICI AMC, MTAR Tech, Jindal Stainless, and so many other things.
Wow. I mean, we're seeing up moves of like 6, 7, 8% across the board on index counters. It's phenomenal. Bajaj Finance up 6%, Eternal up 5%. This really is historic. Go ahead, Shell. Yes.
One thing I wanted to point out was the first 15 minutes are very critical at this point of time, because they will decide the trend for what the Nifty is going to be. So the high and low of the 15-minute candle for the moment is 26,341, which is just a fresh record that we are looking for, and the low at the moment is 25,772. Let's see how this shapes up, and a move below the low will be profit booking, above the high will be a trend day. Let us see how it pans out. But this is 15 minutes where institutions will set the pace. What to do beyond 9:30. Aabha.
Okay, fantastic. I think the mood is set for the market today, and we'll keep on top of that. We'll also continue to track any kind of reaction on crude going forward. Right now, it's quiet. I think markets are just digesting all the news right now, but we'll see if any kind of impact comes on the oil and gas pocket as well as we move along. Right now, it's all kind of green, whether it's precious metals, whether it's the index, whether it's broader markets, and we're seeing historic moves on the back of the US-India trade deal finally coming through. It's a fabulous, fabulous Tuesday morning. We had the budget on Sunday. Markets not too happy with that STT surprise, but overall a budget geared towards growth, also placing India on the global map. And today, with the trade deal being signed, I think we further cemented that position. It's looking really good this morning, and as we were discussing earlier, looking forward to seeing a really good high on closing as well. We'll be back with that later in the afternoon. Thanks so much for watching.
Presented by National Stock Exchange.
Look, this investment guru tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said! Well said! Well said!
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
gentlemen, a seminal day for Indian equity markets. Late last night, there was a massive geopolitical, economic, political announcement. Take what you might, it would be, but the Indo-US trade deal is through. Markets are beyond buoyant, they are actually euphoric. You see the Nifty at this point of time showing a 2.7% uptick, 2.5% on the Nifty Bank. The Sensex has actually risen 2200 points, and across the board the advance decline is in favor of bulls. One more important development: today is the weekly expiry of the Nifty, so the shorts in the system, because this sword that was hanging on the head of Indian equity markets, the Indian economy, is now off. Therefore, you might see sustained short covering after the initial euphoric buying. More importantly, the rupee has started to strengthen, and that was perhaps the missing link. But to this and a lot more, let's discuss the way forward with Mr. Arun Kejriwal, a person who's seen a lot more over the last three and a half decades. Namaste Arunji, your first reactions to this trade deal and the reaction from the market.
I believe one needs to admire the confidence that the leadership of India had in not succumbing to all kinds of pressures put up by Donald Trump. It's the sequence of events which has led to this trade deal being signed, and a trade deal which has all the benefits with India written all over it. Let's see the sequence. You had Republic Day, EU signing the deal on that day or the next day. Then you had the budget coming in, and you had people of all sorts of hues and cry crying about the budget. Nothing has been done. Markets tanked on that day, and see the rebound yesterday as well as today. Trump comes in and signs the deal with his good friend Mr. Modi. I believe this nothing more than coincidence can be attributed to these 4 or 5 days where one after the other things have happened.
Yes.
Going forward, which would be your next question, Shell, I believe we now need to get back to the drawing board. We have to start looking at those companies which are performing, which did not perform because of the temporary setback with exports, but would perform going forward. And we all need to do a lot of homework in burning the midnight oil.
Absolutely, I completely agree with you, Arunji. The slide in both stock market prices as also the mental makeup of investors over the last 18 months, plus that deep shade of red on mid cap and small cap portfolios was sort of preventing us from finding hidden nuggets. Textiles, auto stocks, pharmaceutical companies, chemical shares are all on fire. Some of them, in fact, many of them on the limit 20% up circuit, because the overhang gets removed on further exports and the tariffs come down substantially. More important, look at how banks have come up, because that's a derivative trade. Exporters take credit from banks, and banks therefore are now doing extremely well. Mid-sized City Union Bank, Karur Vyasa record high, Frontline, Axis, State Bank of India record high. Arunji, would you now be sanguine that the tailwinds are now behind us rather than the headwinds that we faced in the market? Your view on the rupee, do you see it appreciating above 90?
Absolutely, Shell, you hit the nail on the head. From headwinds, we now are talking of tailwinds. If we talk of the rupee, the biggest selling pressure on the rupee was the fact that the trade deal was just not happening. We are talking about it all the way from August, and we are now in Feb. So a good 6 months, nothing much happened. I believe the depreciation of the rupee would also stop, and we would seek lower levels with the currency improving. Don't expect it to jump 1%, 2% every other day. It will be a slow climb. But yes, the depreciation part is now out of the way.
Fair point. A view on the IT space as well, Arunji. Do you expect some clarity coming in from the H1B space too? This trade deal is beneficial for Indian IT companies in a a sidebar kind of a thing where American boardrooms will now be sort of clear that okay, they can go ahead with Indian hiring. They can add to the GCC space in India. Do you see that overhang getting removed on IT?
So, Shell, with your permission, I would like to use a light analogy here. Whatever was happening over the last couple of weeks in particular was because it was a game of one-upmanship that was taking place. I didn't like you. I didn't like your progress. I didn't like the way you were moving up. Hence, all of this was being played out. Now that you went and signed a deal, a mother of all deal with European Union, my problems with you are over. And I have switched back and come back to reality. With this done, it's only a matter of time before IT companies and any issues concerning H1B visa will also get resolved satisfactorily. So it would become business as usual sooner than later.
Fair point. But of course, the easiest thing in the world is to analyze markets. In hindsight, everything becomes clear. And at least I am an expert on that. But Arunji is an expert on looking ahead. Now, in your crystal ball, Arunji, what do you see happening to the broader market over the next 6-8 months or so? Should the rupee appreciate? Is there likely a pause in FII net selling? They would be looking keenly at earnings growth. Sadly, not much of green shoots were visible in the third quarter earnings. But given the negativity in the last 18 months, how do the next 6 look?
You're absolutely spot on what you have just said. Let us look at it going forward. Things have been bad. Q3 has not been the most promising of results, and we can attribute various events to it. The trade deal was not happening. There was uncertainty. Exports were hit. There was geopolitical tension. Hopefully, with this trade deal now done, clarity on exports will happen. Business will start picking up. We have only spent 1 month in the current quarter, which is the fourth quarter and last quarter for FY26. So you will find some of the companies who had complaints about the uncertainty now getting to get their act back together. The rupee, which was depreciating, had a downward bias, will now start correcting. I am not saying it's going to move up sharply right away, but downward bias will at least become neutral to positively upward bias. Add to this, the domestic economy has been doing reasonably well on all fronts. So it is the people who were connected with exports who had the worst off in most things. With this getting back to normal, a lot of things will start falling into place. Give it some time. 6-8 months of uncertainty cannot start yielding you results from tomorrow morning, but probably the beginning of FY26-27 will start telling you that the better companies who were affected are now getting their act together and starting to get into place. Coming to your question on FII selling, there would be a 2-stage prognosis that could happen. One, their selling would start reducing, and probably buying in select stocks would start happening as they pick out the winners which would get impacted positively with the new trade deal, with the new policies coming in, and the government in the budget not reacting to the global situation on tariffs, which was affecting markets not only in India but all over the world.
Okay, two developments that I'd like to point out. One, there are no losers in the Nifty. All 50 of them are up. Two, there are no losers in the FNO space as well. All 213 stock futures are in the green, and it comes as little or no surprise that the two top gainers in the futures space, ladies and gentlemen, are Adani Enterprises and Adani Ports. Why would that be? Let's put that question to Arunji.
So you have Adani as a company or as a group being one of those persons who has been aggressively extending their footprint in the company. They are into the core sector, whether it be infrastructure, whether it be utilities. So they are in power, they are in ports, they are in logistics of a different kind, etc. You have those small irritants, US Court, Heidelberg, and so on and so forth, but they are investing tons and tons of money in building Indian infra. Any company which does that provides jobs, employment, GDP, economy boost, etc., cannot remain down in the dumps indefinitely. So it's a good thing what's happening. Look at what they are doing in power, green power, solar power. Khavda is something that I would recommend somebody who has the means and is willing to stake a adventurous trip to go and see what is turning out to be the world's largest single solar plant anywhere in the world. It's not just Adani, but multiple people who are there. It's only a matter of time before the amount of power generated in Khavda could even blind the sun. So it's no surprise that Adani is the top gainer for the day.
Arunji, I was perhaps looking for some kind of a spotlight from you on how this US trade deal may ease the regulatory sword that's hanging on the Adani Group from the US side, the SEC side.
It's possible, but don't expect that to be removed tomorrow. There would be that serving of the notice, etc., etc. Some paperwork would happen, and then it would get diluted in due course of time, because everybody knows that certain things are done in a certain manner and you just can't do without it. So I don't believe it's anything which is as serious as is being made out to be. It would get resolved sooner than later, but not tomorrow morning.
Okay, ladies and gentlemen, I just like to point out the volume picture for you. Remember, on a daily basis, we trade somewhere between, on a good day, 2200, 2300 crores on HDFC Bank and ICICI Bank, full day volume. If it's a good day, maybe 2800 crores. Now we are at 944, which means the first half hour is ready. Look at the HDFC Bank volume. It's already 2100 crores. So there is short covering, there is fresh buying, and more importantly, that's fresh hope coming into the system. Reliance has already traded 1500 crores. ICICI Bank has traded 1268 crores. And this is the first half an hour of trade. We are going to have a volume breakout. We are going to have a gap up. Let's see how far this gap up is sustained in the first 1 hour of trade, but it's looking good. Your final comments, Arun sir, are you walking a little lighter today? Are you hopeful for the rest of the year? And how are you feeling at this point of time?
So let's look at it in a little more larger and holistic manner. You have now been given the ammunition to fight and to grow and to expand. A good trade deal with European Union, a good trade deal with America. Of course, there are the fine points yet to come in, but you have been given a competitive advantage with your neighbors, with your closest competitors. Say, for example, textiles. With Bangladesh, with Vietnam, you have now been given a distinct advantage. Having got this, having got a government which has not done anything knee-jerk in the budget, but given something which is for growth, stability, and a longer-term vision, you have all that is required to start firing. It's only a matter of time before the economy starts delivering on these fronts. It also means work for someone like me to look at those stocks which could give you the returns that one expects over the next 8 to 12 months. One will have to do some homework over it and then get into the investing mode. It gives a new life of hope for all those IPOs which were waiting to come in. And I won't be surprised if you have IPOs opening as early as the next week starting 9th of February, coming back to the market, and suddenly you find February turning out to be a good month. So plenty of hope, plenty of expectations, but the best part is that markets after that initial thrust are also seeing some cooling off. It's not euphoria which is driving the market.
Yes. Absolutely. Arunji, as always, a pleasure to listen to your very articulate and thoughtful views, both for the short term as also for the medium term. Have a nice day. I believe you are not in Bombay, you are traveling. Thank you for your time on such shorter notice as well.
Thank you. Thank you, Shed.
Before we end, ladies and gentlemen, a quick look at the indices. 600 points higher on the Nifty. The gap up that we've seen in trade seems to be sustaining, at least for the first half an hour. Let us see how it happens. Sensible buying happening in all export-led counters which benefit from the Indo-US trade deal announced late night yesterday. Remember, those stocks were in pain for the last 5-6 months or so. So very strong sustained buying happening in textile stocks, a couple of auto stocks, the IT space, the chemical space, and the pharma space as well. It's a crisis of plenty. All 213 futures are up in the green. All 50 Nifty stocks are in the green. The advanced decline ratio is extremely bullish, and the tailwind seems to be now behind us as far as the sentiment on Dalal Street is concerned. Stay tuned. Today is a very important day, and lots of good folks, sensible folks are coming on BTTV to share their experience on how to navigate this bonanza that's come late last night. Thank you for watching.
Presented by National Stock Exchange.
Look, this investment guru tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said! Well said! Well said!
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.